Hello everyone, this is Sebastian McMahon from IA Financial Group and I'm back with the weekly economic review for the week ending April 6, 2023. So let's look at the markets at the close on Wednesday because Friday is a good Friday this week. Just 3 weeks of data here. But before I start this morning, we just got the Canadian employment data coming out. The Canadian economy continues to be strong in Q1, stronger than we expected, than the market expected, and also than the Bank of Canada expected. I just looked at the monetary policy report for January, and they were expecting a 0.5% growth in the first quarter of 2023, and now we're looking at maybe 3% plus because employment is strong. Hours worked are stronger than expected too, so there's strong momentum, and inflation remains sticky. And this morning we also got the reading for wage growth, and we got 5.2%, which is a bit of a slowdown versus the 5.4% year over year we got last month, but it's still above the 4 to 5% range that Mr. McClem was already talking as being too strong. So what Mr. McClem said earlier this year in a conference that if wages remain between 4 and 5, this is not consistent with inflation getting back to target, and we remain above 5. So it gives you an idea. There's no sign yet that the Bank of Canada is planning to come out of its pause to hike some more because just to continue to fight the economic strength and the inflation persistence. But this is a risk that's important in 2023, and we continue to monitor that for you. So this week's markets performance positive for bonds, lots of volatility, lots of stress in the bond market recently, but 1% higher for the long index, 0.8% for the universe index. If you look at equities, positive on the TSX, negative in the US, mostly because of the rise in the price of oil. Remember that early this week we got news over the weekend that OPEC plus Russia decided to cut production by 1.16 million barrels per day. This pushed the price of oil higher to start the week. So of course this helped the Canadian dollar. This helped the TSX. Price of oil now is back in positive territory year to date. And this is inflationary. So the price of gold also up 2.6% on the week, now up to $2020. This is one of the highest prices in history. So interesting movements there. U.S. manufacturing sector data this week was the highlight in the U.S. We got the ISM services and the ISM manufacturing. Both were lower, but the ISM manufacturing has a longer history, is more tightly correlated to economic growth, and it is sending a recessionary signal right now. If you look at the chart on the left, we're at about 46 on the manufacturing PMI, and all of the shaded areas on the left side chart are recessions. And as you can see, typically when we're at this current level, we're in a recession or about to enter one. So this is sending this kind of signal. And on the right, well, we have one subcomponent. I picked the supplier deliveries component now. Interestingly, this is a measure that relates to how hard it is to get your parts delivered from your supplier. So usually when it's harder to get your parts delivered, it's either because the economy is overheating or because COVID, of course, when there were some issues with the supply chain. Now the level that we're at is consistent with the previous, the recession that we had in 2008. So it shows that for businesses, there seems to be lots of slack. It's easy to get parts, so the backlogs of orders at multiple levels are starting to be thinner. So that's a very interesting feature, the U.S. economy right now. But when you look at the Canadian economy, we're also starting to see signs of slack. If we look now at the Business Outlook survey from the Bank of Canada, on the left you have the index itself. So they ask multiple businesses in Canada every quarter. They ask different questions about how things are going, how things are looking when you look forward, and the expectations component here, well, it's turned to be negative now. So going down from a very elevated level post-COVID. when you look on the right hand side, one of the important questions that we always look at is when they ask businesses, is there some significant difficulty to meet demand? So is the economy overheating or not? And we were deeply in overheating territory recently, but now this thing dropped like a rock, and now we are seeing more and more slack. So we're not yet in a very slack environment on the GDP side. So GDP is not running below potential, at least based on these observations here, but we are getting slower there. So we're seeing strong momentum in the short term, sticky inflation, but when you look forward, businesses are not expecting the economy to continue to overheat, and they're not expecting to have difficulty meeting a softening demand. So the US job data is not out yet. As I said, it's going to be out on Friday morning. As I'm recording this, it's Thursday morning. We don't have the data yet, but we did see the unemployment claims coming out this morning. We see that the unemployment is rising a little bit on the claim side, but more importantly, the continuing claims are showing that when someone loses their job in the US, it seems to be taking longer and longer now to get a new job. So some signs of slack are appearing in the US labor market. Let's see. Next week, we'll discuss the non-farm payrolls. What to watch next week? Bank of Canada rate decision. No change expected, but we'll be sure to listen to the tone that they use and the message that they're sending as the economy and inflation remain more resilient than expected. And in the US, we'll have CPI inflation expected to slow down on a monthly and annual basis, but 0.3% month over month. If you annualize that, you get 3.6 to 4, so that's still above target. And year over year, 5.2%, yes, slowing down, but still above the range, so still uncomfortable on the inflation front. And we'll have the minutes of the March 2022 FOMC meeting, which are always an interesting read to have an idea of what they're talking about and what they're worried at the Fed. So that wraps it up for the week. ia.ca/economy. Everything you need, including the podcast, you can find there. So make sure that you give it a look. Always a pleasure to serve you, and I'll be back again next week.